fueled by AI, the boom that we're seeing when it comes to exports and imports. There's a little bit of a recovery in the property market. IPO market continues to be strong here after we talked about reclaiming the top #1 spot for IPO market last year. And as Eric just mentioned, we just surpassed Switzerland when it comes to being an offshore wealth hub. So I'm going to use my unbandaged hand and finger to put my finger in the wind, Secretary Chan, about a pulse check of where we are.
Always up, right?
Always up. Hopefully. Does that mean there's more upside and downside risks to the economy? Where do you think this growth momentum can continue?
Well, the momentum continues to be quite strong. Take the IPO market, for example. The number of companies queuing up for listing, over 400 major companies. And we are also exploring with other markets like Korea, the Middle East, ASEAN, to have more dual listing. Not just stocks, but perhaps to begin with, things like ETFs. So the stock market, we remain confident. Asset and wealth management momentum also very strong. Capital flow coming in. Last year, capital inflow into our various funds total over $400 billion US. So it is quite a significant increase compared to the year before. At the same time, we are very committed in terms of developing our technology and innovation sector, which will be one of our key future economic growth engine. So, multi-pronged approach.
Multi-pronged approach. The last time we spoke, Secretary, was back in March. I think it was just weeks, maybe days after the Iran war broke out. And you said it takes a few months to really assess what the inflation dynamics and growth dynamics will be. We're 3 months in now. I have to get your update here on how you're viewing the macro risks right now.
Well, over the past few months, as you may have observed, although the fuel costs went up, but overall,
one of the most expensive in the world in Hong Kong, I have to say.
Well, we don't encourage
prices at the pump.
We don't encourage people to drive fuel-driven car. Yeah, use EVs, please.
Yeah. But does it mean that there's more? How do you balance the risks right now? Do you think that there is more upside or downside risk to your growth forecast? I think it's still around 2 to 3% right now growth this year.
Well, the inflationary pressure will be building up. At the beginning of this year, we put 1.3% of the inflation rate projected for 2026. A few months ago, we revised it upward to about 2. So it may be well over 2, but still manageable. Because, say, for example, for energy supply, the majority of the energy supply is across the border. And most of them are renewables. So the impact on us, yes, particularly for those sectors like transport, they are affected, of course. But at the same time, the government responds very fast. We roll out support measures to relieve some of the pressures on them.
We talk about just this, even if we see the war end today, that inflation might stay here for a little bit longer, given just the damage to energy infrastructure, how long it takes for energy flows to resume the Strait of Hormuz.
And also the disruption to the supply chain.
Yes. Markets are shifting their forecasts, or at least what central banks can do. We've seen some central banks in this part of the world already raise rates. Traders are pricing in a Fed rate hike by year end. Can Hong Kong withstand a tightening cycle?
Our dollar is pegged to the US dollar. So in a way, we are affected by the interest rate trend. Our assessment for the rest of this year is that interest rate in the US, given the inflation, very difficult to come down. But at the same time, although the trend is the same, but it's not on a lockstep. When you look back a few years ago when the interest rate in the US went up or came down, largely the trend is the same, but we judge the impact on Hong Kong based on our liquidity positions. Say, for example, if the capital inflow remain very strong, the interbank liquidity is high, there is no reason for us to push up the interest rate. So remain vigilant, but at the moment, I think wouldn't be any very significant changes. Yeah.
I have to get your take on the regulatory environment right now. I think last time we spoke, Hong Kong in some ways is a victim of its own success amidst this IPO boom. We were talking about the priority is quality listings. The last couple of weeks, we've seen what looks to be a pretty unprecedented crackdown from China on cross-border trading. What we heard is that it started in the brokerages, but there's lingering concerns in the market now that this could spread to financial services here in Hong Kong, whether it's wealth, IPOs, property. What are you hearing on the ground?
Number one, the central authorities are very supportive of Hong Kong. They want Hong Kong to succeed as an international financial center, so no doubt about it. This is one. Number two, the recent crackdown are mainly on those people who move their funds to Hong Kong for different investments, not through legitimate means. So if the capital inflow are in the proper channel, they still are encouraged. We are still working with the central authority, for example, on further improving the cross-border GBA management, wealth management connect, to expand the quota of investment by individuals in the GBA area and diversify a little bit as to the products that they can invest. So that is just number one. But from a broader perspective, you know, we have the different connect schemes with the mainland, stock connect, bond connect, and on that, we are also building an infrastructure, a custodian infrastructure, ICSD. It is International Central Securities Depository Infrastructure, to enable different securities, bonds, equities, to be put in the same platform, to enable cross-collateralization, so that liquidity could be quickly enhanced. And at the same time, on the basis of these collaterals, you can roll out different derivative products. So that is also one way to enhance capital efficiency. But from a broader perspective, even for the stock market, we are reviewing our listing regime to make it move with times, make it easier for companies of the future, say, for example, high-tech companies, to be easier to list on our stock exchange. We are also working to expand, to lower the transaction costs, to improve the settlement cycle, so it is on multiple fund, to enhance the competitiveness of our listing regime.
We've seen some reports of banks maybe taking precautionary measures, whether, you know, there's one Hong Kong bank that, you know, in one of their branches in Shanghai, that they suspended opening new accounts for mainland clients. We've heard some Chinese banks here in Hong Kong that have also suspended some of these offshore accounts as well for investment. We've heard banks here, and the UBS, for example, has postponed a wealth event in China. HSBC has talked to their Hong Kong-based private bankers, saying, you know, discouraging them from traveling to the mainland for now. What is the message to banks right now? Because, you know, is this an actual directive from Beijing, or are banks right now just being more precautionary?
Well, different banks have different practices, but I guess for the banks, the mainland market is growing in affluence, growing in their aspirations to have certain asset allocated offshore. But this must be through proper means. Say, for example, insurance products.
Yeah.
The insurance products in Hong Kong, nowadays insurance is not just for life insurance or medical, but a lot of them are investment linked. So previously, we have observed substantial capital flow coming to Hong Kong, investing in insurance products, most welcome, of course. But at the same time, some of them may not through the proper means. Now it is just put it back to the proper channel. But the products here remain very competitive, very attractive. And we are also working with the mainland authority about the possibility for our operators to set up an organization not for selling, but for client services. So this matter has been receiving attention, and I do think when we put this into the proper channel, we can inspire the confidence of the mainland authorities about the unwarranted leakage of foreign exchange reserve. Then with that trust, we can move forward.
Do you think
on a
it'll
more
have
sustainable basis.
Will it have any long-standing impact on flows? Mm-hmm. Does it redirect these measures here, redirect flows back domestically to the mainland?
But I think the interest and the desire to have asset allocate offshore will remain. And this will continue to be a very, very strong driver for our financial services sector.
Yes, it's the long-standing practice has been, though, if you're a wealth manager in Hong Kong, is that these Hong Kong-based private wealth managers will go to the mainland, they'll meet and build relationships with clients there, and then they come here to Hong Kong to open an account, to buy an investment product. Will Beijing still allow that to happen?
Well, I think we have to step back a little bit to look at the bigger picture. Yes, in terms of cross-boundary asset and wealth management sector, we overtook Switzerland. Yeah. And when you zoom in, about 56% of the AUM, the capital flow,
comes from China.
No. It is come from outside of China and Hong Kong. Okay. And we are seeing increasing flows from the Middle East and ASEAN as well. So let's focus on building a bigger pie and improving the connectivity, which also, in a way, will help the sectors to develop.
Could it curb spending when it comes to the property market as well? I mean, the first quarter of this year, I think mainland buyers were sweeping up a lot of property here in Hong Kong.
Well, compared to the peak, still very moderate. The situation is also different. A couple of years ago, in the year 2008, until 2017, there is shortage in supply, shortage in land supply, shortage in residential property supply, coupled with the buying power from the mainland, went up property price, and we introduced different demand-side measures to suppress foreign demand and investment demand. But now the situation is different. We have enough land supply on the market as well as in the pipeline. As you may have observed from the land sale program we announced after the budget. Actually, that land sale program, the message are two. The first, to our people, we have enough land bank. So when the property market goes crazy, we will timely roll out additional land supply. So don't worry. But at the same time, the message is also to the developers. We have been very prudent and very careful in terms of property price and land supply. As you may have observed, say for example, in the land sale program, the number of lands sold by us, the number of units to be built on those lands in the past few years, not exceedingly large. When we roll out the land sale program, we also took into consideration, number one, the residential development undertaken by the MTR Corporation, the railway plus property. Number two, lease modifications, meaning that land initially not for residential purposes now being rezoned and able to be developed into residential properties, and also upzoning. So taking this all into consideration, the final figure is the land sale of the government. So we have been very prudent and very careful. Another example is on the office and commercial property. As you may have realized, since 2023, we stopped rolling out any office land because the demand-supply situation. We let the market digest the oversupply of offices, but at the same time, we also roll out some more innovative measures to help digest the existing stock. For example, we encourage some office properties in certain areas, suitable locations, convert into student hostels. This is just some of the examples.
Yeah, we've heard when it comes to commercial property, right?
Yep.
You have so many international firms that are setting up offices here.
Expanding
the IPO
as
market
well.
is getting people excited and coming back to Hong Kong in some ways. We talked about the IPO pipeline, which you think remains strong. You think will be better than last year in terms of fundraising?
Why
Confident?
not?
Why not?
Of course.
Okay.
Yeah.
I have to ask, because we have a lot of big IPOs coming up in the US. SpaceX is the one that comes up first later on this week. We have been reporting, sorry, my mic, that Hong Kong and Chinese investors have been barred from getting a piece of this IPO. Do you know anything, like, have you heard of anything? Why do you think we're seeing this right now? Because it seems like it's about national security concerns, but what are you hearing?
And there is also unilateralism there. Well, previously, you must have heard about banning Chinese companies to be listed on the US exchanges. We don't think it's a wise move. In a way, we, in Hong Kong, could be an unintended beneficiary. These companies will come to Hong Kong for listing. But looking forward, I think for us, what's important is concentrate at doing the right thing, improving our listing regime, promoting various measures to enhance liquidity, quality-wise, be stringent, defend our reputation, then Hong Kong will continue to prosper.
Are you surprised that Hong Kong investors have been lumped in with mainland investors? I don't think I've ever heard something like that in the commercial space, right? You hear about that, about Hong Kong is part of China and whatnot, but to lump Hong Kong investors and Chinese investors and bar them from participating in a U.S. IPO, what do you make of this sort of
I think
trend?
that this is detrimental to your U.S. interests. Why don't you welcome the liquidity from all over the world? Yeah, I think this is, for us, when you look at Shanghai, look at Shenzhen, we have huge number of excellent tech companies at very attractive valuation, waiting for investment. No matter it is IPO or private equity, VCs, or even patient capital. Nowadays, through the Hong Kong IC, we have been channeling sovereign funds from the other jurisdictions and long-term funds to co-invest with us into industries of the future, hard tech, health tech, life science projects. So plenty of opportunities. I think for Hong Kong, as I mentioned, concentrate to do the right thing and work with different partners to the extent possible, we'll continue to prosper.
The reason for the restriction was because of national security risks. This is critical technology. How would you define then what critical technology is? Because wouldn't any AI company then be in that realm?
Oh, you should ask the US administration.
How do you see that play out though? I mean, you are yourself in the budget was advocating for new listing rules to attract more of these Chinese aerospace, commercial aerospace companies to list here. For Hong Kong to become that fundraising hub for them to go global, right?
Yeah, for us, grab this opportunity to grow stronger.
Okay.
Yeah.
Okay. I was going to get your take on, there's this big, massive story that we talked about today about China and how they're spending I think it's 2 trillion RMB, nearly $300 billion in terms of building AI data centers in China domestically. How do you think Hong Kong is going to fit into that?
Well, we are also building our own computing capabilities on this multi-pronged approach. Apart from computing capabilities, I think what we bring to the table is the international use case scenario, the international data, and international talent. So play to our strength. They have their strength. They are very strong in their basic research, in their modeling, large language model for the domestic market. But when these tech companies need to go overseas, need to expand global, this is where we come in. We come in with capital, talent, data, computing capabilities, and user case scenario. So we can work together.
One last question. A lot of economies are dealing with this right now, the haves and have-nots of AI, where it really is kind of dividing the winners and losers and the distribution of wealth. How does Hong Kong, as a financial secretary, how do you deal with this kind of K-shaped economy?
Well, AI training for all. This is something we have to embrace. We need to learn it. We need to understand it, use it well. Then you will find this is so useful and helpful and make life even more wonderful because you will have more time, not to do the repetitive work, but for you to think and for you to find new opportunities.
How are you using AI now, I wonder?
This is a great question.
As a financial secretary, how do you incorporate AI in your work?
I believe the information I gave you, some are from AI.
All right. We'll have to fact check some of that. Okay. Secretary, it was a pleasure. Thank you so much for joining us here on stage.
Thank you.
All 10, everyone. Thank you.
Very kind. Thank you.
Please welcome to the stage Susan Chan, Head of Asia Pacific at BlackRock, for a conversation with Bloomberg's Rebecca Sin.
Good morning, everyone, and thank you so much for joining us here today. This room is packed, and we're excited to have Susan join us. Susan, I know you've just flown back yesterday late last night, so thank you for being here with us. So let's start with, how's business been going?
Good morning, everyone, and thank you. Pleasure. Business is doing really well. I have to say that, and probably everybody will hear the sentiment, the previous session, Hong Kong's really booming. So we're seeing this across the region from a asset management and growth perspective. So
business has been going well. Volumes are up, as Paul Chen said, 400 billion. If we think of how investors are allocating from an asset allocation perspective, what are you seeing across BlackRock?
So in terms of allocation, Asia continues to be a region that really embraces active strategies. So we are seeing the growth continue around the active mutual funds. We are considering to continue to see growth in ETFs, something very close to our hearts. And more and more, though, we're also seeing allocation into the private markets. So really 3 key themes. Let me just touch upon the active side for a minute. So in active, what we do see is the desire for more thematic funds. We see the play on income continue. Income story is no stranger to us in the region. Everybody wants income, so now people are looking for diversified methods to generate that income. In particular, we see high demand for hedge funds. We see high demand for systematic funds as well. So that has been the lion's share of the growth coming from across the region.
So if we drill into the active, as you mentioned, what some of you may not know is Susan and I both started, we know each other from ETFs. Susan was head of capital markets at BlackRock for iShares, and as you know, ETFs has grown significantly. In Hong Kong, it's now surpassed $100 billion in assets under management, and active is a big thing. To your point, in Hong Kong, there's a lot of active ETFs that provide very good income. And Hong Kong, amongst Asia Pacific, is one of the highest in the region. Some of the ETFs provide more than 20% income paid on a monthly basis. So as a house that has both active and passive, how do you see the two coexisting?
So we fundamentally believe that we needed to bring the two together, and we did this when we brought